Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today, talking about session trades. So we have the day count, we have our opening range initial balance, we have templates that will build over the course of a few days, the week itself. I talked about the other day being very selective and understanding what you're hunting for in terms of a best trade setup, because even taking 2 or 3 trades a week that are parabolic types of setups, or 90-10 opportunities in the sessions that are scalable setups, which guaranteed, if you're following more than 3 or 4 instruments, you will get at least 2 of those a week. And so today we'll talk about instrument selection and breaking things down in a simple format so that you, again, can have a basket of instruments instead of having all these charts marking through and figuring out day counts and all these things, which becomes information overload. Traders are sending me these charts with all these day markings. And again, I come back to the simple understanding that each week is a template. We can have day counts from breakout trades. We can have peak formation highs and lows of weeks. But when the week starts, you have a brand new clean template that still can fit inside of that, and also begin a new template Monday to Friday. So it's intermelded. But if you are trading a session, whether that's Asia, we can put that on here, Asia, London, or New York. Obviously, you want to know in the session that you're trading, let's just assume you're only trading one session. Some traders might be trading Asia, London. Other traders might be trading London, New York. And other traders who, like myself when I was in Australia, could be trading all 3 or looking for an opportunity in one of each of those 3 sessions. So when we start our week, we can form a template bias based on what's already traded to the left. So we may have a signal day, we may have a higher low of a week, we may have a reversal day already that's happened at the higher low of a week, but we have our opening range, our initial balance, and as the week progresses, we have day 1, day 2, etc. So on our day 1, we can have on a Monday, we may be again forming a new template, so it doesn't quite set up based on whatever's happened. We haven't broken any weekly levels. We may not have broken any daily levels. We may have broken a level, but we've established a high and a low. That gives us a thesis again if we've broken out of a weekly level for the session that we're trading. We'll talk about this because we'll identify a best trade setup for each one of the sessions over the course of the week, and also explaining front side, backside, and recognizing the type of template that you're in. So then obviously we're either in an up template, a down template, or we're in a trading range, strictly a high and a low. And so when we come to our session, obviously we may already have had a signal day. So again, coming into a new week, we may be it may be an inside day on the day itself. We may not have a signal day or anything that is recognizable. So again, we're filtering through instruments. We're not sticking with one instrument and going, okay, today I need to do this, and just trying to trade every movement. We're looking for the easy setups, and we'll talk about what that means. Because when you come into a session, if there's no signal day, or if you have a signal day and you have a template thesis, template bias, when we come into our session, whether that's Asia, London, or New York, again, we could have a 3-session setup for a parabolic move. Or we can be hunting for a parabolic setup. For example, a day 2 trend trade, or a day 1 high of the week, low of the week trade in the session that we're trading. It may be a 3-session setup on a day 1, on a Monday. It could be a 3-session setup heading up into the open of the Europe-London window. We want to know, is it a trend trade opportunity in terms of the best, so out of the basket of instruments that you're able to filter through? Is it a trend trade that you're identifying as a best trade setup? Or are we potentially now at a reversal trade, a high of the day to low of the day opportunity, or low of day, high of day opportunity? Or do we have potentially a high of week, low of week opportunity? Is it a day 3? And is there no news in the session that we're trading? So we talked about this. When there's no news present, I'm going to trade that based on price behavior with an expectation that it could happen in the first hour, the second hour, or the third hour. When we have major red news on the calendar, I need to wait for that news to be released because we could get big wicks, we can get a momentum trade, a first bounce opportunity, or nothing at all, and then we go back to work looking for the entry confirmation after the news has been released. The big thing I want to reinforce here is that when you come to the session that you're trading is that you can have all these charts up with all these things marked on them and which day it is and everything else, but then you lose sight of whether or not there's actually a best trade candidate in the session that you're trading, because we could still be on the front side of a market. Even though there's a template building on, you could be looking at an instrument that the price action is virtually terrible for a high probability trade setup. It still can play out and move in the direction of your thesis, but it's garbage in terms of being able to position yourself for a scalable opportunity, or the price action is very choppy, even though it's moving in your direction. Because again, that could be building order flow for the trade on the backside. So your best trade opportunity on that instrument may be coming on the backside in a couple or 3 days. So that's what we're trying to clarify here. We've talked about different templates. We've talked about up templates, day 1, day 2, day 3. And that's the pump and dump type of template. We'll change that to red, easier to see. We can get a dump and pump template that reverses and comes back the other way. And again, some of these days may offer a fantastic opportunity maybe for a short trade, and there may be an opportunity for a long trade on the reversal side. The other scenario is that there may be price action in here that really is terrible, even though it's working its way back and forth and coming down. It may not be ideal in terms of entering in with a best trade setup opportunity. We could have a market that's trading back and forth in a trading range, and it actually may offer a great scalable opportunity maybe in the London session or possibly in the Asian session. So again, clarifying that the template doesn't necessarily mean that it's going to guarantee you a best trade setup. But if we're hunting through the pairs in the session that we're trading, we can hope to identify a 90-10 opportunity for an easy money trade setup. Sometimes the market will throw us a curveball. It'll give us a peak formation day 1, day 2, day 3, and it's inside of our Monday, Tuesday, just like we saw with the pound Aussie, Euro Aussie this week. And then we saw an Asian session trade and a complete reversal on day 5, our Friday. Identifying the session trades, again, if you're trading Asia, we want to maybe look for a parabolic opportunity in Asia. If we're trading London, we want to be hunting the best setup in London, and it might take 3 days to get the London best trade setup. You might get a scalp on day 2, but London may offer a parabolic clean trade on a Wednesday, and you might get a blow-off move on a Friday. You may miss some trades. Again, coming back to having a basket that will help you identify what best trade setup is in your session. Again, we can come to New York. We might have a lot of news in those sessions. There may be opportunities at the end of the London window on some days based on the template, because they may move it heading into the session before New York opens. What it will really boil down to is understanding the template that you're in, whether or not we've had a signal day, but most importantly, if you can master the 3 session setups and recognize what they should look like, some of the best trade candidates that will be offered in your session. What do those look like? Sometimes we may get a peak formation in London, a peak formation in the US, and it may trade sideways into the new day, and it might go vertical in Asia for a very high quality, high probability opportunity to position ourselves in a market that's going to go vertical. It might be a day 3. Sometimes we can get this on a day 2. Depends on the instrument. Sometimes we could be hunting the pound and the euro in Europe and it doesn't move, but the Canadian dollar all of a sudden gives us a great best trade setup in the Asian session or the London session. Sometimes the US session will make a peak formation high, a peak formation low. Asia may trade down into that, and Europe may open up and go vertical. Just using short and long examples. So again, a 3-session setup, peak formation high, peak formation low, consolidation for a parabolic opportunity in the Europe-London window. Example of peak formation high, peak formation low, London, US, Asia's inside for a vertical move in the London session on the backside of a move. This could be a Tuesday. We could have a Friday, Monday, Tuesday, and this is now broken and we're going on the backside of a move. We could have a Tuesday, Wednesday, Thursday peak formation high, maybe first red day for a vertical move in the London session on the backside of the move. So we'll walk through some examples of these templates, and the 3-session setups. Occasionally we'll have might be a 2-session setup because one session may make both peak formations. We can have a consolidation. But if you can recognize the template, whether you're on front side, backside, or you're in a trading range, do you have a parabolic opportunity, or is this a high of session, low of session type of reversal trade? And again, just recognizing, is this just going to be a session scalp, or can I size into this? Parabolic moves I will often look to size into if the market gives me that opportunity. So we can look for different examples. We'll try to identify an opportunity in Monday, Tuesday, Wednesday, Thursday, Friday, Asia, London, New York. And it doesn't matter what instrument it is. It's whether or not we have a setup. So we can come and look at the Aussie dollar. High probability that the Aussie dollar might move in the Asian session. Same with the Japanese yen, the Japanese crosses, and maybe the Aussie dollar crosses. But for simplicity's sake, we'll just look at some basic setups. We have a market that gives us our day one on our Wednesday, the previous week. Inside day on the Thursday. The Friday goes vertical and makes a pump day. That also is the high of the week. Now coming into our Monday, our Asian session, the market immediately goes up into the high of the day. So an example, again, of a 3-session setup. Peak formation high in the London window. We'll draw these on here. Peak formation high, high of the week. Peak formation low in the US session. Heading into our new day, the Asian market goes right back up to the high of the day. That is a signal opportunity. They take out the high of the week, the high of the day in the beginning of the session. We can put an EMA on the chart for simplicity. We have a market that engulfs and reverses in the beginning of the second hour. They pump up and collapse for a simple entry on a 5-minute model, giving traders a 1-bar stop. And in this type of situation, traders may recognize the opportunity for this to potentially hold into the open of the new session. But an easy blow-off vertical move, whether they take the money and take it as a session scalp, decide to leave a trailer on. So again, the low of the most recent low of the US session, we're at major round numbers. This is an easy blow-off move for the Aussie dollar in the Asian session scalp. Come to our London window, and again an example, a US lower peak formation high that is made at the close of Friday heading into our Monday. Monday breaks through the low of the day for a lower low. We redraw our levels. Heading into our London window, we have a market that has pumped up to the high of our day and the high of the US session swing high. And again, on a Monday, we're potentially creating a new template. We're in our opening range. And this is a great example of that because the market is expanding the range. We get a high of day, high of session opportunity in the London window for a nice vertical move back to the low of the day in our London window. And while we're at it, we can just continue that because the same process applies. I know there's trades on other instruments, but we're just talking about identifying a best candidate, a 3-session opportunity on the day, on the session based on the template. We're on a day one, Monday, and the same process applies. We get a market that pumps up in the gap time to take out the high of the day before breaking down at the end of our first hour for an easy blow-off move back inside of our universal criteria for a vertical short trade back to the low of the day. So again, we had opportunities in Asia, an Asian opportunity on the Aussie dollar, not on the same week, but an example of a Monday Asian session trade, which aren't always all that common, but again, the pound, yen, euro yen, maybe Aussie yen, Aussie dollar crosses, yen crosses may offer an opportunity in the Asian session. When we come to our Tuesday, we can look at Asia again. We are looking for pairs possibly with a 3-session opportunity. We have a peak formation high in the U.S. session, and then we also have a peak formation low in the U.S. session heading into our new day. The market gives a sideways consolidation before trading down into our low of the day. So again, this is a pattern, a template. Although it's a 2-session setup, we have our peak formation low from London that is held. We've made a peak formation high. They've made a higher peak formation low. The consolidation has stayed inside. Again, this is a 5-minute chart. I talked about this trade the other day, going to a smaller time frame when it gives us this reversal level and looking for the entry around numbers. But 5-minute chart gave a clean entry for a vertical move on a day 2. So again, day 1, day 2, trading back through the high of the day, the high of the week in the Asian session. There was major red news in the London window at 2 a.m. New York time. If we look at the euro on Tuesday, we had British pound claimant count at 2 a.m. New York time, but another example of a 3-session opportunity. So we have peak formation low in the U.S. window, peak formation high. So we're talking about session trades depending on the session that you're trading. And then we have a consolidation. We have a consolidation in heading into the Asian session. It's inside, but we have a market that is now setting up for a parabolic opportunity in our Asian London window. So the parabolic opportunity again is when we get price making higher highs in this particular case, or lower lows if it's a downward parabolic, but we have an opportunity now to position ourselves for a vertical move targeting back to the high. Peak formation high, peak formation low, consolidation into a parabolic for the Europe-London window. And again, the news was 2 a.m. British claimant count. So we're entering after the news, whether it's 5 minutes after, 10 minutes after, it doesn't matter. We have a pin, hammer, a coil inside on a parabolic opportunity on day 2 on the euro. We had Canadian CPI on Tuesday morning, U.S. time, New York time, 8:30 a.m. So no other major red news on the calendar, and a best opportunity set up on gold again. So we had a day that had traded up inside, but we're on day 2. So again, day 1 broke down. We had peak formation high, peak formation low. We have a creeping trend back up, and London puts a high day in place. We've come up 3 levels of rise from the Asian session, 100 plus pips, so from our low of the day. But when we come back and look at where that began, we've actually come up 150 pips from that initial burst in the US window, 50, 50, and 50. So again, I talk about the stair step because we're going to we'll remember this, the stair step up, and the elevator down. So we have a market that comes up to the high of the day right at the beginning of our US window. This is a 15-minute chart. The 5-minute chart right off the bat, 30 minutes into our window, gives an engulfment. So remember, we have a whole area, 3 pushes that is now trapped, and we have an entry on our universal EMA. So remember, stair step up, elevator down, and we have higher highs until we get to the London high of the day, but we still make higher lows, and we have consolidation for a nice parabolic vertical move through the low of the day. Now, we talked about this trade the other day. We can just back this up. You'll notice that the market takes out the low of the day and also trades down into where that failed breakout was on Monday of Friday's low. So they clean out everybody. They've gone up 3 levels of rise for the dump, but they also offered traders the reversal opportunity back through the high of the day. And if you step back and look, we have Asia, London, and New York, 3 pushes for the short squeeze back through the high of the day. We sort of briefly touched on this as well. I'm not going to go into too much detail on this. The reversal coil is the reversal, the W, and the 3rd hour vertical blow off move. So we see this often a lot on stop hunt reversals, oil, gold, Currencies, depending, but obviously their volatility won't always be the same, but this is a 150 pip move back up, 3 levels of rise for the reversal opportunity as well. And this is the similar price action we talked about from the Asian session before, when the market takes a lot of slow moving candles back and forth. Even though it's grinding its way down, it's building order flow for the explosive reversal trade. We have a reversal off the bottom and then the coil, and this is all 1 hour, 2 hours for a third hour explosive reversal. Wednesday morning, we have an opportunity again in Asia on our Japanese yen. We have a peak formation high. We have a market that has, we'll just back this up a little bit so that we can go back again to our template. So we have a market that's come up vertical on Friday, made our reversal so we can begin our day count, whether this is day 1, day 2, day 3. We're into a new week now, and the market has continued to go higher. They reversed on Tuesday into our peak formation low, and now we have a peak formation low, a peak formation high, heading into our Asian session. So we have the same pattern. Remember this: peak formation high, peak formation low, consolidation into a new timing window. This could have been London. It's the US. We're in a 25 pip box, lower highs. They dump it down for the reversal. We go to our 5-minute chart, and this template, this is a template, remember. So for the hindsighters, if you can't recognize peak formations and consolidations, you will never pick up these opportunities. But again, on a smaller time frame, the same pattern will get traders in when they see this setting up. But the 5-minute chart still gives traders an easy, no stress, vertical move back through the high of the US session. Some traders may want to take money off or hold on to that. We're on a day 3 now. A day 3 may have the potential to continue to go in a parabolic direction. This market coiled sideways, and we'll come back and just add in a couple of other things, because remember, look where we've come down. 3 levels of drop. We're at level 1 in the 100 pip box on day 3. This is the day 3 parabolic trend trade back to the high of the week. So again, a vertical move that offers traders no stress. Traders in the Europe-London window have an opportunity to position themselves in, add in a gain, take money off, whatever that may be, for the blow off through the high of the week. Which brings us to our US session. Again, there are other opportunities on other instruments, but we're talking about that there was an opportunity in every session for a best trade setup. After taking out the high of the week, the market coiled sideways, putting in a peak formation, head and shoulders, whatever you want to call it, before dropping down and engulfing back inside the high of the day. No major red news on the calendar. Traders had the opportunity for the low-hanging fruit reversal trade, and this is an example of where, when this market pulls back in the beginning of the session, I would be getting in anywhere back inside of our breakdown level at the breakout high of the day. Going to a smaller time frame, traders have the easier vantage point of recognizing the level. The trade is already on the backside. Now we're shorting this and getting in the market for the move back down towards the low of not only the London session, our peak formation low, exact same pattern again. We talked about this the other day. Once this market goes into consolidation on a second tap, I would be either exiting the trade completely, but I follow this right down, and if it takes me out, I'm gone, and I've locked in the money, we're done. So again, there were instruments that offered other trades, gold, bigger opportunities, but in terms of just the currency in this particular pair, easy low-hanging fruit, US session for a session trade. High probability though. So again, levels. Would I scale into this? Absolutely. Would I be going full size? No. Full size is when I'm going to get a high of week, low of week opportunity. These are trades that I would put 25-30% max size on, take the money. There may be another trade in that session for me, whether that's on gold or an index or another currency pair. It could come after the New York Open. This was a first hour trade, so we still may have time to look to see if something else is set up for a best trade candidate. We have a market that's been trending strongly, and after the Japanese yen reversal, looking at a yen cross rate may offer us a second hour opportunity after the New York Open, and we get that still on the front side in a strongly trending market. We've dropped down before the window. So this potentially could be a dump and pump scenario. I repeat this, if it breaks down prior to a session starting, think dump and pump. If it pumps up before the session starts, think pump and dump. So we get our entry for a reversal opportunity after the reversal low-hanging fruit on the Japanese yen, again demonstrating session opportunities are everywhere if we know what we're looking for. Peak formation high, peak formation low in the Asian session, creeping trend down into our window. The engulfment, beginning of the second hour, we engulf that lower structure. The market has coiled sideways. New York Open happens for a vertical move inside of our EMA back up through low-hanging fruit that have shorted down from the high of the day, the high of the week in the London session. We can look at the Japanese yen heading into our Thursday's Asian session. We have peak formation consolidation based around 75. We have peak formation high up at the high of the week. We're on day 4 now, remember, and we've got a market that's gone day 1, day 2, day 3, gone vertical on day 3, potentially putting in a low as well, a triple bottom low on the U.S. session. So peak formation high in London, peak formation low in the U.S. window, and consolidation sideways before dropping down and making a lower low prior to our Asian session opening. That market auctioned down into that peak formation low at the beginning of our Asian window. Traders had an opportunity to position themselves, but understanding you're buying into the high of the week and a market that any consolidation whatsoever, if they took this trade, locking in that money or being at break even once that level is broken, we're trading into the high of the week, into major round numbers on day 4. And we have a market that is now trapping volume up high. So a clean entry if traders entered in on a smaller time frame. They still have the opportunity for in the area of 20 no stress pips. Trading with the trend, trading into the high of the week, being aware that it's day 4 in our 4-day template, and we're buying into the peak formation high. Coming into our Thursday, we have peak formation high in Asia, peak formation low in the U.S. window that Asia trades down into. And again, that same pattern, peak formation low, peak formation high, consolidation heading into our new session window. You'll also notice that that reversal level is the low of the previous day. So again, we have a peak formation low in the Asian session that is traded inside of the US session peak formation low at the breakout of the previous day's failed breakout. Universal 5-minute entry criteria gives us a entry either just prior to the window or at the beginning of the window itself for an easy 50 pip vertical move back through the high of the session in our London window. Major round numbers, 50 to double zeros. Very clean setup in the London window on day 4, Thursday. Thursday, 8:30 a.m. New York time, we had major red news. So just looking for simple trade setups after major red news has been released. There was no first bounce opportunities. The Aussie dollar gave a first bounce. We'll look at that in a second. But in terms of just going back to our normal setups, we have low of the day on our 3-session setup. We have London forming the high and the low. They pump it up into major red news. That market breaks down at 8:30 a.m. into the higher low, the peak formation low. So again, if we redraw our levels, that is our, after the news, our peak formation low and peak formation high. After the news, they pump it back up into the high of the day. This is a 15-minute chart. Our EMA for a session scalp, an easy blow off 25 pips straight back through the low of the London session. Peak formation low, peak formation high, major red news, pump, reversal. New York Open, 15 minutes into the high for a vertical blow off move in the US session. Which brings us to Friday morning Asian session. We have a market that broke down through the low of the week from our peak formation high in London. And that gave us a low-hanging fruit trade in the U.S. session to continue through the low of the week before engulfing and locking into the low into the close of the session. So again, this is similar to the pattern we looked at earlier in the week. Peak formation high in London, peak formation low in the U.S. Consolidation sideways heading into our Asian session window. We have a breakout of the low of the week and the previous day's low for an opportunity at the beginning of the Asian window. So remember the setup, 3-session setup, peak formation, consolidation. Universal entry criteria is met for a vertical move in the Asian window, and again an opportunity on a reversal day to possibly leave a trailer in as this market demonstrates behavior of staying parabolic for at least the next session. And the same patterns will show up over and over again. Even though this is a 100 pip box, it could be a 50 pip box. It could be a 75 pip box. Peak formation high in London, peak formation low in the US, consolidation for a vertical move in the Asian window. Knowing this, when we come into our new session window, this market is still front side until we get our vertical move into the EMA. That's our stop hunt for the continuation after the London equity market open. We've broken the high of the day. Traders are shorting this, so higher highs. They're shorting this, and we're still in the front side of the move. We're still in the front side from our parabolic reversal trade. London equity market opens, gives us an engulfment entry. So again, recognizing the timing and the behavior of price for an easy back to the high of the day. Getting filled above the numbers. We're above 50. This market gave an easy 25 to 30 pips vertical move, continuing with the trend. And that brings us to gold. We had a U.S. session major red news at 9:45 a.m. New York time, Friday night, and we have markets that are backside on several pairs. And whenever we get this type of situation, we had a vertical move in London. Obviously, there's a London parabolic trade as well on gold. I don't want to show gold over and over because a lot of people don't like to trade gold, but same behavior occurs on gold. Day 1, day 2, day 3, 3-session setup, peak formation low in London, peak formation high in the US, consolidation, Asia's inside for the vertical blow off in the London session. So the move started prior to the gap. We get our pullback. This is a 15-minute chart for the vertical parabolic continuation trade. So we come to our US session, and several traders messaged me, do you see low-hanging fruit? Do you see this? Do you see that? And I said clearly on Friday night, 9:45, I'm not doing anything until after the news. And the reason why that is because when the news is at 9:45, typically we'll see the first hour make the pump up or the dump before the reversal second hour. When it's 9:45, I'm expecting them to continue to pump that market right up till major red news. And so often traders get in early prior to the second hour starting, or at the beginning of the second hour, and there's another 45 minutes where they get whipsawed and the market keeps going. You'll notice on a 15-minute chart, this is 3 clear pumps back up to the high of the London window. 3 clear, distinct pumps on the 15-minute chart. We'll blow this up. So coming back to emphasizing patience, because this is such an obvious setup. When you recognize this, we talked about this earlier in this video, the stair step and the elevator. I joked to one trader that they even told you what time the trade was going to be at. So we have a market that has had a vertical move. They've gone into consolidation. We have the low of the day did not get taken out. I know some traders shorted this, and I was at the gym. I didn't even bother. I just said I'm coming back for the New York Open and then the news. Traders scalped. They could have took money off the table, and you'll notice how fast this market reversed. That is a dead giveaway, because when they do that, number one, they've got people shorting it at the beginning of the session. They want to stop them out right away. Now, if you didn't take any money off when it got to the low of the session and they reversed, they came back very fast to make sure you did not get any money. Then if you're short, notice what they do. They don't go back far enough to allow this candle, this is a 5-minute chart, to get out of a losing trade. So if this trader held on to this in hopes that this would roll over, they don't go low enough to let him out of a losing position if he's been filled on this time frame or on a 1-minute chart. That starts the pump. Pump and pump right on the New York Open, continues to go back to the high. So they've cleared out all these lower level shorts. And that is our setup now for the pump, and dump. Now, when I look at this chart, I do this on several videos. Wherever the closing candle is on the bullish side, draw a line. This is what I'm talking about right here. I'm going to blow this up. This is really important to understand this. That is where the pump begins on that last leg. These longs are all filled after this first candle. The longs are all filled at the close of these candles. We'll just highlight this. This is important to understand. That is the lowest close bull candle prior to the news on the beginning of the pump up. Why that's important is because when the news is released right here. We've locked in our high bull. The high's locked in, half Batman pattern. This candle closes at 75. All of this volume is caught above there. All of those bull candles that are filled above there, all that volume is caught. So an hour, this move starts at 15:20. This is over an hour later of volume trapped. I told one trader, as soon as the news is released, I will count candles. This has not gone vertical through the high of the day or the low of the day. We are inside. So if a vertical candle on the front side of a week on Wednesday goes vertical through the high of the day, I could expect a possible reversal, 1 minute, 2 minute, 3 minute engulfment, or it could be a 5 minute, whatever. But I count candles, 1 minute, 2 minutes, 3 minutes. The next candle starts a new 3 minute cycle, and look where it closes. Soon as that candle started to go down, I was getting in, adding, boom, drops. And somebody said, oh, did you just go for 50? This has nothing to do with 50 pips. This has to do with targeting the low of the week. But the first thing I'm looking at is at least a range expansion of this as a potential profit target. Why is that? Because that's a geometrical structure. So we get a range expansion, and then we get the same thing. 1, 2, 3, 1, 2, 3. Now we're starting to slow down. We're getting some pins. I'm closing this trade out. That's easy money. Leave a small piece in because we had a low of the week opportunity back. We'll just go back and show that on the hourly chart. It was possible they were going to take out the low of the week. Didn't care at that point. That was easy money. And that setup is a textbook opportunity. We talked about this. We talk about it over and over again. Step 1, step 2, and step 3 to the high, and then the news. This is all caught. Whenever they pump it up and dump it down into that level, 75 is my level. As soon as that candle broke down, where's it going? Where's the money? The low of the day is flat. The low of the day is flat. They made a rectangle, large rectangle, consolidations down low. They stop them out in the first hour and a half. They pump it up, and then they dump it down and get all the traders who are long in the first hour in the U.S. session. So that is a textbook setup. Did not give a first bounce. Why? Because it's escalator up, elevator down. They're doing this fast because they've got everybody caught. So that's not for everybody to trade. If you want to trade the news, this is a setup. This is a very specific setup. The point of the video today was to demonstrate that when you understand 3 sessions, so we can even just come back and look at timing of this, this is a 3-hour setup. 3-hour window in our London session. They make a higher high. The setup for the news starts right here at 6:30 a.m. 1 hour, 2 hours, 3 hours, dump. Peak formation high, peak formation low. They go higher, take out the high of the day for the vertical move back down through the low of the day. So there are 3 session opportunities everywhere. You have to hunt, but if you're trading Asia, you should have an idea now what you're looking for. Front side, backside. You might get a couple scalps front side, but you might get a parabolic move backside. You might get a parabolic move front side on one instrument and a parabolic move backside on an instrument. You might get a news catalyst trade. Study these 3 session setups because they are the ones that when you get a 3 session opportunity as part of a larger 3-day setup that can go parabolic, they're scalable, and they're very low stress. They should move right away or very consistently in the direction of your trade with very little heat. So hopefully you got value from today's video, traders. The day count the opening range, initial balance, all of that is critical. But you should be able to identify the setup in order to trade those templates with scalable opportunities inside of those templates. Have a great weekend, traders. 1% better every single day, and may the markets go with you.